Here we are, Trav, at another Construction Cost Consultants podcast. Thank you for coming in, mate. Travis is from Insurance Advisernet, a long-time friend of mine. We've worked together for a long time, so I thought it was quite appropriate to get you in to be our first guest.
Yeah, well, thanks, Andy. It's fascinating to see what really happens behind the scenes after watching you and Brett and Jackie and co sort of bumble your way through the last few podcasts. So I thought lift the standards overall. So no, thanks for the invitation. On a serious note, it's good to be
here. So I've got one question. Let's straight in. Why do you think that underinsurance is an issue on residential properties?
Well, it's a massive question, isn't it, in our industry? I think actually it's nothing new, actually, Andy. And I don't actually think there's one thing, to be frank. When you look back on home insurance over the years, the major event of Christchurch was the wake-up call. Individuals homeowners for many years before that had open-ended policies, so there was no need to actually focus on their sum assured. Prior to that, I think it's a mixture of people buying homes and having perceptions that they insure for the purchase price. There's apathy. There is a lack of knowledge of building costs. There's all sorts of things. Kiwis have always been highly insured. The penetration rate has always been incredibly high. But this sum insured issue has been around for years, and all factors, I think, come into play.
So it really came around, and I only really started getting involved in insurance 2010, really, when the earthquake started down in Christchurch. And that's where the business came from, and we've talked about that. Brett and I talked about that in one of our other podcasts. And when the insurers or the reinsurers started changing and saying, no, we're going sum insured, because nobody knew what the liability was down in Christchurch. And from working down there, the insurer we were working for, they were just chasing to find that liability, which became the big problem because it was square metre rates. There was no sum insured. It was open-ended policies for everybody's houses. And then 13th of July 2013, that all changed, and we got sum insured, and we had the insurers giving out the square metre rates, which were $1,800 or $1,600 a square metre. That's where I think that things changed for me, because I seen that there was an opening in the market that valuers were doing it, and I thought that us as quantity surveyors were probably were better qualified than them to be able to do it, which is where I've built the business, and Brett and I have built that tech part, and that's what we've got to.
I think that, Christchurch, of course, changed a lot of things, didn't it? Amongst other things, though, it was the first event where there were multiple thousands of total losses. In historic events in New Zealand, and we've seen lots of flooding, we've seen lots of events where homes were affected. We see house fires where, houses are total lost. But fundamentally, most houses aren't total lost. So this issue of underinsurance doesn't come to the fore. Partial losses, flooding, don't impact the situation. We haven't had a widespread earthquake until that time. Through cycles, though, amongst other things at the moment, the last couple of years, you think about affordability in the home place. You've got a massive component of government levies in home policies. We've got inflation pressure, and the actual aspect of affording to insure your home, I think, is another thing as well that's affected. So I've always had a view that this is multi-generational, has a lot to do with the history of New Zealanders and home insurance. It's not just one thing. I think now the business I'm in today in the advisor space and the broker space, it's about giving great advice to clients, isn't it? And, we're working really hard at that within our network to give that right advice. And I think that's also something that's lacking. Individuals haven't received the best advice on necessarily what cover to take and to actually focus on sum insured. And, I think that's an important part to play.
Talk to me about averaging, because is averaging on residential you're not allowed to do that in New Zealand, and that's where partial loss comes in, and that's what happens in Australia. Am I correct?
I think that the history of average goes back to 101 insurance, actually, particularly in the marine space, in cargo and other things, and underinsurance being countered by the principle of average. But that was outlawed in the late 70s, and again, it was really at that time protectionism of clients
Yeah.
Hard to explain, hard to get right. So, a bit unfair on an end client when average is applied to a partial loss.
Because they have it in commercial buildings, and I know they definitely have it in commercial buildings in Australia. And I don't know if they apply it here in commercial buildings in New Zealand. I'm not up with that yet.
No, not.
I know they do it in Australia, and averaging, for the audience, averaging is if you... Actually, I'm going to let you explain.
The principle of average, and is not something I can explain without any detail. The reality is that the percentage of underinsurance compared to the actual sum insured is applied to a partial loss.
If you insure your property for $1 million and it's worth $2 million, you get 50% of the payout.
In a simplistic explanation.
Yeah, and that's what average. That's how it's been explained to me, because I'm not an insurance person.
We've got contracts of insurance law reform happening as we speak, actually, with a date, effective date coming in a couple of years. But there's no suggestion, to my knowledge, that there's going to be any change to the laws of average. I don't see that coming into play in New Zealand.
Okay. So at the moment, we've got some changes in the insurance industry, residential-wise, about risk, spreading the risk around. So at the moment, they spread the risk over the whole country, and everybody pays a bit of that risk. But they're talking about specifically areas paying for risk for the residential properties. Is that correct?
I think all insurers are becoming more and more sophisticated about pricing risk. And when I think back over the years, that's I can remember a time many years ago in the company I was working at the time where the North Island had one rate and the South Island had.
Right.
So effectively all the homes in the North Island were insured for one rate relative to the uninsured. Fast forward to sophisticated rating where, houses in a street could be rated differently. And there's no question that risk-based pricing is here forever. And, like smart insurers are going to continually evolve their pricing, and that just makes sense. Now, ultimately, and there's sensitivities over that, because, of course, you've got people that are in areas that are more prone to risk, and individuals are going to pay more.
Yeah.
Can't see that changing.
I heard a story last week of a friend of a friend who'd bought a house that was in a flood zone, and it never got flooded in the floods 2 years ago, and they're fighting to actually get it taken off at the flood zone and get it taken out so it's never flooded the house. Do you hear much of that? And how would somebody deal with that if it was your house? How would you deal with that if you were going to do your insurance?
Well, I don't know. This flood modelling, every insurer is going to have a different play on flood modelling, right? And there's, of course, a lot of experts and a lot of insights in that, and you've got to say a lot of that's valid. And we all read every day about councils in particular and rebuilding homes in places that have previously flooded and other dynamics and risk. But in the Auckland floods, 3 blocks from my place, 4 or 5 houses were yellow stickered.
Yep.
Those houses were built 120 years ago.
Yeah.
So on a historic creek area, waterway, to my knowledge, I've been living in that area for 20 years, they've never flooded before. So this is not just about new homes on areas that shouldn't be built on.
Yeah.
This is a much bigger problem and much bigger issue.
I live in the same area as you, so down the road from where we are, I've never seen so many cars parked where the flooding was when the floods happened. But down there, there's housing, and they've demolished the yellow stickered houses, and they're putting new houses in. They're building new houses, and everybody around the area is moaning about these new houses going in, and I'm saying, but actually they know it's a floodplain. They're actually building them specifically so that the flood doesn't actually affect the houses, and that's what they're doing. So
I think the issues in Auckland are much broader than just residential as well. We've got North Shore issues around drainage, waterways, and there's a whole raft of things. I mean, to answer that question, it's very complicated, and there's lots of different parts to it. I think ultimately you see insurers have some strong views about building future resilience, but this is not about the insurance industry. This is about government. This is about local government, central government.
Yep.
There's a whole raft.
And the construction industry as well.
And the construction industry, yes.
So,
right.
Tell me about your experience with construction cost consultants over the years.
Yeah,
Apart from me buying you beers in the pub.
I can't remember that.
Travis drinks Chardonnay, everybody. I think anybody that knows Travis, they know that. And I'm a pure ABC man, anything but Chardonnay.
The only flaw in your description is I can't remember you ever paying.
I'm a quantity surveyor and I'm Scottish.
So there's no question in my mind that the world's getting more risky.
Yep.
Clients need quality advice. They need someone to help them with their risk.
Yep.
You know, I think in my space, when I think about in using CCC specifically, actually, you know, my home is over 100 years old. It's quite small. It's quite to high standard. And I did a little bit of an experiment and got some prices actually from the direct market. And in my case, I was able to use one of the calculators.
Yep.
And it came up with the sum insured. I got several referrals because the square meterage rules and all sorts of things occurred. And I tried to get some quotes, which was very clunky for a start. And then ultimately, I did go through the experience of the CCC visit and then subsequent report. And between one of those insurers' calculators and the CCC outcome was $400,000.
Wow.
That's phenomenal difference.
Wow.
Now, I wasn't fundamentally underinsured because as an insurance person, I tend to have a bit of a finger in the wind and then add a lot on. Because I think...
You did tell me that at the time.
I've seen a lot of homes total lost. I've seen a lot of underinsurance.
Yeah.
You know, I've been to home fires.
Tell me your experience around that. How does it feel when you're an insurer or a broker and your client has a total loss and is woefully underinsured?
Oh, it's horrific. You know, when you see a rural fire and you think that often in my experience, and it's been a few years now since I've been and seen those clients, but often you'll clutch to the fact that the home sum insured probably gets them something. A lot smaller, a lot more basic. Often the contents are woefully underinsured.
Yeah.
And so what it does often from the insurer perspective, it actually makes settling the claim very easy, quite frankly, because it's cash settled.
Yeah.
And then those clients that are fully insured, you know, to be able to go through and rebuild homes and, you know, that's a satisfying.
Yeah, absolutely. You can actually make sure they get back what they had and
exceptionally so.
They're more comfortable. It's the other side of it that we're trying to protect.
It's absolutely. Actually, after the cyclones hit Auckland, you know, I had some friends that owned a business and had been very successful in business. And that business and some of their assets were covered by a broker with advice. And they had a holiday home out of Peha that was through a bank. And, you know, that home was total lost.
Yeah.
And they were underinsured.
Yeah.
And that was pretty hard to stomach on the basis that, you know, if I'd have perhaps talked to them about it earlier or I might be able to help them out. And, you know, that's in the end, you know, they were well looked after and it was settled, but there was an element of underinsurance there. And that's also hard to, you know, that to me is that through their journey, wherever they might have had their insurances, it feels to me as though they haven't had the right advice.
There's a huge element of the market that do insure through their banks. I know it is a huge thing for IAG. It's a big part of their business. What do you see as a risk for people insuring through their banks?
Well, there's an upside. You know, the relationship with your bank as an individual. Let's be brutally honest. An individual's relationship often with their bank is a lot stronger than the relationship with their insurance company.
Oh yeah, well, you trust your bank.
You deal with your bank every day.
Yeah.
Your bank's financing you to get to where you are. Your bank's backing you up. It's helping your children, but it's future-proofing your life. And so bundling, you know, bank insurance came from bundling all your financial services together. You know, it's not a New Zealand phenomenon. It's globally where banks are involved in distribution of insurance. And I think a lot of the banks have worked hard on things like sums insured and to try to give advice. But fundamentally, it's a convenience for a lot of clients. It's a monthly payment. You know it's covered. Your bank knows your home is insured through them. It's not their primary role to give advice around getting things like your sum insured right. That falls often with the insurer.
So I'm going to track back a wee second there. You said that the banks have done a lot to protect their customers on underinsurance. What do you think that they've done, and what do you see that they've done?
Banks have made some effort, in my view, to educate clients around insurance and the need for insurance. And let's face it, there are proportions of New Zealanders that are uninsured.
Absolutely.
You know, that the relationship with a bank who's diligent around making sure that client's protected is not a bad thing. But ultimately, the bank doesn't have the direct relationship with the insurer that, say, an advisor does, and doesn't have the conversations coming from an advisor who can actually, from a broker who can actually knows what they're talking about.
Yeah.
And the thing to point out there, Andy, is that there are thousands of clients with banks. In that client's mind, they are protected and they don't think about insurance.
Yeah. We put a survey out to the market through one of our marketing businesses, and we surveyed 1,000 people, and it came back that 46% thought that their insurer was responsible for underinsurance, and 28% thought the bank was responsible for underinsurance. That's crazy.
It is crazy.
Yeah.
And I'd love Kiwis, but unfortunately after, nearly 40 years, like 38 years of insurance, I'd love Kiwis to take insurance more seriously, without question. But I'm incredibly biased. If I can talk to someone about getting their sums insured right, tell my story about my home being underinsured. Unfortunately, if you go out there, you have this element of insurance being a bit of that grudge purchase still, and it exists. Notwithstanding that, we've still got high penetrations of insurance. We're fortunate to be able to still do that. I think financial literacy around understanding the costs of rebuilding, understand the value of your assets, understanding how things cost and so forth, does come into play. Our kids aren't taught anything about insurance.
No, absolutely. Yep.
The value.
That's a good point. And we're not taught that at school, and nobody's taught how to run a house.
No.
You learn that, or you're taught that by your parents or whoever. I've taught my daughter how to do it. She's spends a bit more than your average Joe. And my son, he's the tightest guy I'd ever meet. I wish he had become a quantity surveyor.
Well, I think youngs, and probably in my day a little bit, it was get your first car, and then that's where your insurance experience started.
Yes.
Right?
Yep.
It didn't necessarily prepare individuals for when they first rented and needed contents insurance, or then bought a home. And a lot of that's, again, going back many years, the sons and daughters would have gone to where their parents were insured. Yeah. And that's the way it was. That's how the relationship started.
And I remember growing up, I grew up in, obviously, Glasgow, and it's, you have to have insurance when you have your first car. Here you don't have to have insurance. In Scotland, you have to have insurance. So you start to learn to go out and find the cheapest insurance company for your insurance. Never used an insurance broker until I moved to New Zealand. In Scotland, I just went straight to I did everything through my bank, and I learned a lot about that when I came here. My business and everything was insured through my bank. It's very, very different here than it is over there.
Yeah.
Thank you for coming along, Travis. I have somebody with as long an experience. Have you got 38 years? Wow, I don't think I am 38 yet. So well done. Thank you for coming, Travis. That's
wonderful to be here. Thanks for the invitation again, Andy. And I did go to your 50th, so you must be.
Thank you.